Hi there, traders. This is Brad Gilbert with FX Market Insight for Thursday, the 19th of March. All right, as we come into the Asian session, the Euro, the ECB have obviously released their asset purchase program. Now, that's sent Euro up from the low 108s, right up to almost 110. I'll show you those charts in a second. Now, US Senate passing some coronavirus aid packages. One bit of news here, breaking news, Trump signs coronavirus response bill. Now, I think that activates or allows them to activate the military should they need to sort of move on that. But there's a lot of things happening. British pound falls to more than 35-year lows as virus sell-off accelerates, right? So the UK, we're waiting for a UK response. We are expecting the Reserve Bank of Australia to probably cut rates today and come out with some stimulus package as well. So we may see a couple of these currencies run. Now, if I just come back over here to the sort of risk on, risk off sort of page, this is the probably easiest way to track what's going on across these markets now. Obviously, the US equities got pummeled, but they were down sort of 8 or 9% at one stage that I saw. They're only closed down 6.3%, the Dow Jones. So have a look at the sort of risk off or risk on pairs, the yen crosses in particular. They are showing a little bit of bounce here and there. And that's mainly due to dollar yen, right? Dollar yen is slowly sort of climbing back up to 108.40. Asian equities or Japanese equities for that matter, up 2 to 3%. You'd expect to see the European equities go through the roof after once the European session opens, right? So that's where the action is going to be coming up to through the trading day today. The European session is going to be pretty robust with that action by the Fed. Now, if I just flick you back over here to, actually, while we're on this page here, just having a look at the dollar index, right? So we had a massive move overnight. It's just coming back down towards that sort of, I guess, flimsy support of this line. But you know what? The US dollar has had a really good run, and that's because the Fed has been dominating the stimulus packages. Now the other central banks are coming into play. We might see a bit of a correction in some of the currencies. Now, if you just have a look at the Aussie data, and this is something you have to sort of factor in going forward. Aussie numbers, okay, unemployment rate, probably like 20 or 30-year lows. That's going to change very quickly if this whole event sort of continues to cycle away, right? So it looks like everyone's trying to work as hard as they can. Canadian inflation numbers, right, pretty much as expected. Nothing to get excited about, and no real impact on the market. What I did see, if I can just come back to it, is I meant to mention this the other day, like check out the Chinese numbers now. This is where the problem started in China, right? So things slowed down there probably 2 months before everywhere else. But look at the retail sales numbers, minus 20%, industrial output minus 13.5%, and urban investment. So that's what we're sort of expecting to happen across the globe over the coming probably month or two as we catch up to what is happening in China. Now, just coming back to the major currency pairs, now there's no change, right, in the pairs. Like trading conditions, yeah, they've been tricky, but with, sorry, let me just take you over to the charts. With the way things have been moving, the main pairs that have been trending are doing a good job. They're not really creating like technical entry levels at this point, but that's where the Dow Jones, the equity markets, when they start to move aggressively, that's probably the real entry. As you can see, dollar yen just breaking above that short-term resistance, now sort of set to head towards probably 110. You can see here, euro has bounced off those lows around 108 up towards 110. It's going to be interesting to see how this plays out over the coming days, right? This is a pretty big package they've come out with. And you can see sterling here has just completely capitulated down to 115. Now, that's a hell of a move in anyone's books. It's pretty tricky to say what's going on there. If the corona is increasing in the UK, they need to do something about it. Otherwise, the currency gets punished. Dollar CAD, well, it had a hell of a session, but oil's at $23. It was at $20 during the trade day, right? This is a complete meltdown of the oil market. This is going to shut down a lot of refineries because it's now going to be a lot more expensive to get the oil than you can sell it for, right? This has happened before. And, they're not going to turn the refineries back on probably till it's above $30 because this is, you're not going to run a business that runs at a loss even when you're at full capacity. So that's what we've got. So when you come back to, if I bring you back to the daily trade routine, right? And I know some of you guys haven't got access to all the tables, so I'll run you through this, what we've got. Market conditions, they're sort of average. I mean, they're not terrible, but we're getting really good volatility, and it's usually quite directional, right? The geopolitics are dominating, and it's all about the coronavirus. But you know what? The dollar has been moving in the right direction, and that creates opportunities in particular for these pairs. These are the active pairs that have very clear direction. What we are missing is the entry levels, like easy technical levels or fundamental levels. Because this event is continuous, the currencies are all over the place. So just be careful when you go to enter that you are getting in when the equity markets are fresh and moving, or something else has spurred the market on. Because if you're doing it outside that, you're going to get caught up in the volatility that is in general play, right? So the entry is critical to you getting in when the thing is moving with momentum. If you're missing that momentum, you're going to get hacked up. These pairs here, well, I'll tell you what, dollar yen is starting to show signs of clear direction. Euro, pretty hard to say at this stage, and I'm leaving dollar Swiss out as well. So they're the pairs that I'm looking at now. There's probably no point in showing you the macroeconomic drivers because, you know what, this is these events down here probably do not matter at this point, right? That they have been pushed aside, and we are waiting for, the media to either tell us that things are either getting better or worse, and see what the central banks are doing. Now, they're all coming to the party very quickly with loads of money, and that's where we are. Now, I probably missed this article here, actually, which is quite interesting. ECB to print 1 trillion euros to stem the coronavirus rout. I wonder where they're getting that money from, eh? That's interesting. Wish I had the ability to print off a couple of trill or a trillion. That's nice. So anyway, the currencies, okay, what does it do for us? Well, just hang on to your hat. This is not, the ride is not over yet, right? By a long shot. Now we're waiting for, what we're trying to avoid or trying to look out for is those knee-jerk shock reactions. These pairs, the dollar is going to continue to rally against everything. That move there on the euro, this is not unlike what happened on Monday. You see that immediate reaction to the stimulus from the ECB. Then everyone thinks, well, hang on, we're buying US dollars anyway, and it's already dropped almost a cent back down. So you're probably considering getting in any of these pairs on rallies or on the instigation. If there is some stimulus, wait for the initial reaction and then get in, right? To me, they're all going down and all the dollar pairs are going up. All right, that's the way it's playing out. So just go with the flow. All right, guys, that's it from me. Have a good trade day. It's pretty wild times, but you know what? We've been craving some volatility. I'll tell you what, we're getting a swag full of it. All right, guys, have a good one. Cheerio.